Welcome to Talk Tickers, your home for breaking down the earnings reports that are really moving the needle. And today, we got a big one for you. We're talking about Credo Technology, a company that just dropped a Q2 report that sent absolute shockwaves through the entire semiconductor space.
Right out of the gate, the CEO, Bill Brennan, set the tone. He didn't mince words, calling it a landmark quarter, and he pointed directly at the reason why. Credo is providing the absolutely essential connectivity for the world's biggest and baddest AI training clusters.
So how did the market react? Well, it was nothing short of explosive. The stock just took off, soaring over 10%. And that, right there, is your signal that Wall Street is all in on Credo's AI growth story.
All right, so what's behind all this excitement? Let's get right into the numbers, because they are something else.
Look, Credo didn't just beat expectations, they totally obliterated them. I mean, revenue came in at $268 million. That's almost 13% higher than what analysts were looking for. And on the bottom line, 67 cents a share. The street was hoping for under 50. That's a beat of more than 35%. This wasn't just good, this was a statement.
And if you want the real story, the one number that tells you everything, it's this: hyper-acceleration. A staggering 272% increase in revenue year over year. This isn't just normal growth, folks. This is a company hitting escape velocity, all thanks to the non-stop insatiable demand coming from AI data centers.
And get this, it's not just empty revenue. This stuff is incredibly profitable. We're talking elite-level gross margins at almost 68%, operating margins over 46%. They are literally printing cash. $54 million from operations, up over 400%. And now they're sitting on a war chest of over $800 million. Just incredible stuff.
Okay, so the numbers are huge. We get it. But numbers only tell part of the story. You have to listen to the narrative that management is building because they see themselves as way more than just a chip company.
You've heard the saying, right? In a gold rush, don't dig for gold, sell the picks and shovels. Well, that's Credo. Their active electrical cables, their AECs, are the essential tools that connect these massive clusters of GPUs. You know, the brains behind this whole AI boom. They're kicking older, less reliable tech to the curb, and they are fast becoming the new standard.
And this right here, this is their secret sauce. Check out how deeply embedded they are with the biggest players in the game. You've got 4 customers, 4 of the biggest hyperscalers, each making up more than 10% of revenue. And look at that biggest slice. One single customer is 42% of their business. Right now, that kind of concentration is their superpower.
But don't you dare think they're a one-trick pony. No way. They are already looking down the road, unveiling 3 new pillars for future growth. We're talking ZeroFlap optics, active LED cables, and these OmniConnect gearboxes. Each one of these is designed to solve a new, complex problem in the data center. And together, they basically triple the market Credo can go after to what they think is over $10 billion.
So with this kind of insane momentum, what's next? Well, their guidance was just as jaw-dropping as the results. But, you know, with any story this hot, you have to look around the corner for the risks.
Okay, brace yourself for this one. For next quarter, the company is guiding to $340 million in revenue. Now, to put that into perspective, Wall Street was expecting maybe 247. That's a guide almost 40% higher than what anyone was expecting. That is the kind of number that forces everyone to completely redo their models.
All right, it is so easy to get carried away here. And believe me, the hype is real. But we have to be smart about this and acknowledge that there are always a few yellow flags to watch out for.
So what's the other side of the coin? Well, first, that customer concentration we just praised, it's also a risk. If just one of those giants hits the pause button on orders, it's going to hurt. Second, there has been some notable insider selling. Not necessarily a panic button, but something you've got to keep on your radar. And finally, the law of large numbers is undefeated. These triple-digit growth rates can't last forever. The big question for everyone is, when do they start to slow down?
So, after weighing this incredible growth story, the mind-bending guidance, and of course, the risks, what's our final call here at Talk Tickers?
For us, the call is clear. We rate Credo as an outperform. The momentum from the AI build-out is it's too powerful to ignore right now. The guidance is massive, their execution has been flawless, and it all suggests that, for now, the growth story is absolutely outweighing the risks.
So, for those of you wondering how you might play this, here's an interesting, maybe outrageous but plausible idea. A bullish option strategy, like a call spread, it lets you bet on that continued momentum, but in a way that clearly defines your risk. You could even target a move to new all-time highs, somewhere above that 215 level, looking out to that next report in March.
And as always, please remember, this is not financial advice.